So David, I think I found my next big investment and I'm ready to take the leap.
Oh my God, you've been using Flank for a little bit, so it's great you found something.
Yeah.
What is it?
Well, our talk about a circle of competence and also when we looked at recent IPOs got me thinking I should really start looking at some industries. So one of the things we talked about in our IPO episode was Airo, A-I-R-O, and I decided to take a dive into that company and also into the defense sector to get an idea of maybe if that's a place where I might want to invest my money.
Nice.
Yeah.
Elliott loves war. From flankinvesting.com, this is Money Grooves, the show for intelligent investing. I'm David. I've been investing for 10 years.
I'm Elliott. I'm an amateur investor.
And he does not actually like war.
To be clear, I'm not trying to profit off of war. However, defense is evergreen, so I think it's a solid sector to look into.
And it gets people off the battlefield too.
Right, exactly. Drones are autonomous by nature. So the silver lining of this all is that there is the opportunity to get pilots out of the line of fire and reduce the lives lost in times of conflict.
If there's one thing the war in Ukraine has taught us, it is that the war of 2022 and beyond is going to be a war of drones.
Right.
That is something we are seeing.
Right.
And that means, and you're right, like that means that means hopefully if it's a major country against major country, that means that it's going to be less lives lost, and it's going to hurt it's going to hurt countries in their pocketbook, right? War is going to become a lot more expensive.
Right.
And I would much rather have countries get into, financial debt than have 20 million people lost,
right,
in a major conflict.
Right.
So yeah, but I want to hear more about this company. Who are they?
Sure. So Airo stuck out to me. They're a recently public company. I think June is when they went public. They make drones, they do avionic electronics, and they do training of pilots as well. So it's a pretty diversified business. They also operate not only in the military space, but also in the civilian and commercial space, which was another attractive thing for me compared to other defense companies that are solely defense. They at least have arms that are non-tactical in nature.
Yeah, they want to create these eVTOLs, which is like this crazy ass looking thing where it's like a helicopter plane mix, and they want to do it for like short transits, and like take you from like Manhattan to LaGuardia, right?
Yeah, it's pretty cool stuff. And it's also just interesting as a person. I mean, flying is cool, aviation is cool, so it's fun to learn about. I also feel that they have a pretty great opportunity for growth. Not only do they sell in the U.S., but they also sell to NATO and other countries outside the U.S., so they've got a pretty broad market. And they're also chasing several certifications, one of which will allow them to sell to the DoD, which is a great growth opportunity, as we all know.
It's $1 trillion a year customer.
Exactly. Yeah. Right. So I think their opportunities for growth are pretty solid. The last thing that I think is interesting about them is that according to their annual report, they've got a really, really well-staffed executive and leadership team with ties to DoD, ties to different global entities. So I think that if they play their cards right and they make good on the deals that they think they can get, I think they've got a pretty solid model. The last thing that stuck out to me about Airo was that they're focused on M&A, right? And I think that's a solid strategy. I've seen it work. I believe in it because people have always got good ideas. Might as well have an entity that has the cash to pay these people for their good ideas and then uses it to their benefit to make something better than that person alone or that entity alone could make by themselves without the cash. So I do have faith in M&A businesses. I know you have some thoughts on M&A, so let's go ahead and hear them.
Me have a thought?
Yeah, what? David with opinions?
Opinions, yeah. So the M&A strategy. Larry Ellison once said that M&A is a tough drug to get off of because you can buy a company, you can load that company up with debt, and you can take it over. Or you can use debt to acquire it, and then from the management perspective, it looks like your revenue is growing from your core business. Right. It's really hard to filter out that additional revenue or that additional net income, and so it creates it creates the illusion of growth. I like to see a company, especially one that recently IPO'd. I want to see a company that has a single solution or some solution to a big problem, and they are ready. It's a repeatable and scalable business model that they are ready to just go full throat at it. If a CEO comes up to me and says, "I have a plan to do M&A," like, all right, well, what?
To what end? And like to what end? You know? What are you doing M&A for?
Yeah.
Right. And I mean, to that point, Airo is a bit risky in that regard because they have several different lines of business. They're not going all in on one thing. They're going a little in on a whole bunch of different stuff. Yeah,
I actually think so. I saw on Flank right here that you've actually done some research.
I have, yeah.
So the first step is how do they make money, which you wrote on how the company makes money.
Yep.
And they literally say that, hey, they have industry expertise and connections across the drone, aviation, avionics markets. And then if we go into their annual report, we can see that they have 4 business models or 4 business lines. They have their drone, which is the key brand there, Skywatch. They have their avionics, which is like electronic, it's aviation electronics basically, which is another part of their M&A strategy when they bought Aspen Avionics. And they have coastal defense for their training arm and their electric air mobility arm, which is that eVTOL kind of cool stuff. Which they bought Jaunt. So yeah, it's just them. It's them smacking things together and then hoping to find some synergy after that.
Right.
So I could see the case that I could be wrong here. Like M&A could be a good strategy. The sum could be greater than the whole. But what else are you seeing?
If you look at them on flank, you'll see that some of the key metrics like net income, return on invested capital, those are pretty bad numbers, not things we like to see, but they're so young that I think this is an indication of their youth and an indication of the fact that they are in a growth stage, right? It's an expensive thing to get into. So my hope is that these things would go up, is that these things would eventually flip and go the other way once they found their stride.
Yeah. I mean, the revenue is telling a good story. It's doubled in the last year. You're right on net income. They're getting less profitable,
right?
Which could be a part of a growth strategy,
right?
Or they're becoming even more not profitable, not less profitable. And then, negative 6% return on invested capital. That's not good. Free cash flow is positive, which I am surprised to see. I would want to explore how they had positive free cash flow. Free cash flow is just net income minus your operating expenditure, your OPEX. So that doesn't make sense how they had positive free cash flow. Yeah, that you could do some you could have some adjustments to financing or adjustments to it's probably from adjustments to financing activities. So there's probably some weird shit going on there. That's a little bit of a yellow flag I'd want to investigate more. But yeah, I mean, when we look at the company, it was founded in 2005. But I know they bolted on a lot of these other companies, right. And so it's not really fair to say it's 2005. Have you looked into leadership at all yet? Do you understand the founder's vision?
I have looked into their leadership a bit. Their founder's vision is definitely to have many lines, and also to be an innovative leader in the drone and avionics space primarily. It seems to me that that's their main focus. I think the training is certainly something that they do, but maybe not their main revenue driver. Certainly it's in the hardware sector. They also hope that their avionics technology is going to replace aging technology in existing aircraft so that they can kind of mature that arm of the business as well, in addition to the drone sector.
Okay. Yeah. So it sounds like you have a little bit more research to do on Airo, or have you bought yet? Are you?
So I'm not buying yet. I wanted to talk to my good friend David before I bought. And I have done some comparative research and found a couple success stories in this same kind of similar sector.
Yeah.
The first one is AeroVironment. So looking at AeroVironment, they're doing really, really, really well, especially as of late.
Yeah, it's a $20 billion company. I've never heard of them.
Much bigger company. They do very similar things. They make autonomous avionics. That's their primary business, and they are primarily in the tactical side of things, less in the defense and more in the offensive side of things.
So they make weapons?
Yeah, it appears that they do make weapons, which is something that would cause me not to buy AeroVironment.
Oh, that's fair. Yeah. The firm develops and deploys autonomous systems, precision strike systems, counter UAS technologies, space-based platforms, directed energy systems, sick, lasers.
Yeah, right.
And cyber and electronic warfare capabilities built to meet the mission of warfighters and conflicts.
Yeah. This is a war company. But if you look at them as a business, again, their business is much more mature, much more realized than Airo, right?
Yeah.
So interesting comparison here, shows that M&A works, shows that this space works. But again, I can't invest in a company like this and sleep at night.
So why not? Because if at first you said it's defense that you're interested in, part of best offense is what is that? The best defense is a good offense, right?
Best offense is a good defense.
Just because you've made a weapon doesn't mean you have to use the weapon.
Sure, and you're not wrong about that. For me, it's kind of a fine line of morality, right?
Yeah.
Like when you're looking at investing, for me at least, I want to make sure I'm investing in things I believe in, things that have that if they made more money, it would benefit people, generally speaking. I think that Airo has enough diverse business lines and enough of a focus outside of purely defense and offense that they could do stuff that benefited others and didn't come directly from harming others, right? Yeah. AeroVironment is very focused on offense, and so I think for me, this is probably a pass.
Yeah, I hear you on that. But it's cool that you what I like that you did is you found another M&A strategy,
right?
And I can tell this company is doing M&A because you can see right here. There's no way your book value goes from 886 million to 4.43 billion in one quarter,
right?
Unless you bought another company,
right?
Or like I don't know this company. I'm literally just guessing, but I would be pretty sure that they acquired a company recently.
Yeah.
It looks like the stock price really liked it.
Mm-hmm. Yep.
I mean, it's up 90% in the last year.
And this is
wow.
Yeah.
They are running 30% gross profit margin. They're negative. Oh, they weren't profitable. Probably because they bought something. Probably because they bought a company.
Spend a bunch of money.
Yeah. Just because I have more data and I can see what the company's done over the long term, I am more interested in this as a business. I don't know what type of weapon systems they manufacture or participate in, so I can't speak to the morality of it. But I mean that's one of the punchlines of being an investor is you invest. Like I would never tell you where your moral line should be. That's a decision you make on your own.
Well, and like if I didn't do the research to look into what exactly they are making and where they're making their money, I would be like, oh, cool, drones, buy, right? And in fact, you're buying drones with bombs attached to them. You know what I mean? Yeah. So this was a really interesting thing to look at. And like you said, from a business perspective, it's super interesting because you see how a business grows and how a key purchase or a key contract, DoD, can make a big difference in a company. And also an example of M&A in a very like highly technical, expensive space to operate in. Like this is not easy stuff to manufacture. It's not easy stuff to invest in. Like it's super specialized.
Yeah. Definitely high barriers to entry.
Right.
Did you find any other companies?
Yeah. So there was one more that I found, which is called Heico. Ticker is HEI. So Heico, kind of same story here. They're an M&A company. They operate in the same space, and they're doing really well as well. They're a little bit more focused on the electronics. So they make replacement parts. They make high quality goods, and they're selling them to aviation, selling them to defense, and selling them out. So they're a little bit more focused on the kind of the brains and the guts that make the things work rather than the things themselves. And they've done really well. They've done really well too.
Yeah, the company is headquartered in Florida. Nice Florida man company, and currently employs 10,000 full-time employees. Segments include Flight Support Group, Electronic Technologies Group. FSG uses technology to design and manufacture jet engines and aircraft component replacement parts. That is a boring business.
That's what I'm saying, bro.
That is what we like, right? That's what Peter Lynch, that's what Buffett always talk about. Boring, simple businesses that we can understand, especially if it's in our circle of competence.
Right. I love the fact that this is a boring business. Exactly. I didn't even think about that.
Yeah.
It truly is. I mean, they're making replacement parts. They're making things that have already been made, probably innovating on them a little bit. But if you look at their description here, they are like trying to replace stuff, right? They're making replacement parts. And we all know that aviation is an industry.
Ship breaks.
Ship breaks. And we also know, you as a submariner know how long the military, for one, and also any of us who have been on a commercial flight in the last 10 years know how long planes like to stay around. So it's a highly replacement-based industry, right? Like if this was replacing printers, no way. Like I'm not trying to I'm not trying to fix my.
Yeah, but you'll do a $2 million upgrade cycle on a large maintenance period on an aircraft and keep the airframe online as opposed to trying to swap out the entire aircraft.
Exactly.
Yeah.
So I think this is a promising business. I think it's one that's not going to go away.
Yeah, and also I got to get to the numbers.
Yeah, let's do it.
I am interested in this one as well. So I mean, revenue's telling a good story. We're seeing, I like to, over 9 years, it's compounding at 13%, 17%, 13%. So I would like these numbers shifted around a little bit. I would like to see them accelerating their growth.
Sure.
But I don't know I don't know anything about this company. So, but net income is pairing perfectly with, that matches revenue exactly. They're holding, so when you have 10 years of data and you have your gross profit margin sitting around this level, does that tell you anything?
if anything, it's that they're doing something right.
Yes. What it tells me is that they are fighting off competition.
Oh, sure.
They are able to protect their margins. Whatever it is the company is doing, they are holding their margins, which means they have some sort of moat created because they've been able to do it for 10 years.
Yeah.
Net income's telling a little bit different of a story, but net income is further down the income statement. And the biggest thing is operating expenses. So it could be them just doing different things with their operating. But what gross profit margin tells you, how to calculate gross profit margin is your revenue minus your cost of goods sold. Cost of goods sold is a line item that just is involved in the direct manufacturing of whatever the product or service that you're providing.
Sure.
And so that tells you about the economics of the business. That's why I like. That's why we put gross profit margin in front of net profit margin and operating margin, pre-tax margin, because those are just different things. But but yeah, I love seeing constant gross profit. I mean, it would be they are expanding. It grew 1.55% in the last year. It's expanded 0.67% on average in the last 9 years.
Yeah.
So we are seeing some margin expansion.
Yeah.
Book value is telling a great story. Shares outstanding, good. They're paying. It looks like they're paying a special dividend every year. Free cash flow. Oh yeah, man. This is a company I'm going to look at.
Yeah. Hell yeah.
Thanks for bringing. Actually, I'm going to do it right now. I'm going to hit start research on Flank, and of course Siri pops something up. And
Siri.
And so just for the new flankers out there, my first steps are going to be, how do they make money? Is the business growing? What's their growth strategy? And I can already tell based on what we saw, the story is pretty good for, is the business growing? We like to see these over at 10%, and they are over 10%. A lot of them are.
Cool. I can't wait to see what you find.
Yeah.
So for me, the takeaway from our conversation today is we started with Airo, and I'll end with Airo. I think for me, Airo's not going to be an investment I'm going to make. I think it's a little bit too early. I want to watch them a little bit to see if things kind of tick in the right direction.
Yeah.
I think they've got a lot of promise. I think they have a lot of business lines to manage. I want to see how things go before I invest in them, but I am very excited to see what you find with Heico, and I'll be sure to leave you some insightful comments on your research.
You're going to give me a flux?
Yeah, I will.
Yeah, all right. So in short, Air go or Air no?
It's an Air no for me.
Okay. Yeah, I agree. So I think your intuition is exactly right there, because they're doing this M&A model to find a repeatable and scalable business model.
Yeah.
You don't need to put your chips on the table when they're still trying to find that.
Right.
But now you've seen the company. It's on your watch list. It's in your research queue on Flank. As you revisit the company, if you see that revenue spiked, or something makes more sense and the story's coming together,
or see a headline or something.
Yeah. That can be your indicator to go.
Yeah.
But right now the story, we don't like uncertainty as investors.
Right.
And so that's I think your intuition's perfect.
Cool. Great.
That's all for defense on this one, but I do want to take 1 second to give a celebration to one of our users. His handle is Phil Fisher. He hit a 32-day streak on his Flux. That is better than mine at 9 days.
Hell yeah, go Phil.
Yeah. Hey Elliott, what's your streak at?
Not listed.
Oh no. It's okay. You're still a new flanker.
I'm still new. Yeah.
But in honor of Phil Fisher completely dominating our streaks, I want to give one of the best books ever written. In fact, Buffett says 40% of his entire investment philosophy came from this book that I'm holding in my hands. It is Common Stocks and Uncommon Profits by Phil Fisher, which is the handle of this user. So Phil, thank you for being a supporter of Flank. Thanks for all the feedback you're giving us. Just to do a PSA, he said that this streak thing is making him a 5 times better investor.
Nice.
So
awesome. New addition to the stack.
New addition.
Hell yeah.
That's for Phil Fisher. Thank you.
Nice. Thanks, Phil.
And that's just a reminder that Flank will make you a better investor. You just got to give a flux.
Right.
And the idea behind that is by reading a piece of analysis each day and giving your flux to it, you are learning more, and that knowledge will compound over time. And then some days, that's all you'll do is you'll give a flux and go. Some days you'll do a little bit of research. That'll make you a better investor even quicker. And Phil Fisher, I'm sure if I just scroll just a little bit, he's publishing research left and right. He's looking at AMD. He's looking at NVIDIA. He's looking at some biotech companies. I've been talking to him on the side. He's a doctor, so he's
Nice.
very, very intelligent. So he's going after like some of these like he's going after companies that are in a circle of competence through medicine.
Nice.
And then he also is just interested in semiconductors.
Cool.
So he's been studying the crap out of them.
Right.
But yeah, it's great to see. It's great to see the thesis of Flank that if you research companies and if you consistently work on your skills and confidence, you'll see that compound and your confidence will grow as an investor. And if we get enough people to do it, we'll tighten the wealth gap.
Nice. Awesome.
That's all for this one. Thanks so much for coming, and we'll see you in the next one.
Thanks, everybody.